All right, traders, tomorrow's going to be a very lucrative trading day as the CPI data is going to be released in the pre-market at 8:30 a.m. I am likely going to post an updated price action analysis plan towards 9 a.m. tomorrow in the morning, so stay tuned for that. But I'm going to do the best of my ability to prepare you to trade the best setups at the best prices despite this massive move occurring that hasn't happened yet. I'm going to show you exactly what it is that I'm looking for. So typically on CPI days with massive overreaction, if we have a massive spike up during the pre-market, I will look for opportunities to buy put options for reversal against the overreaction to the upside. And if we have a massive spike down, initially I will kind of hold off, and then I will look for a key dip buying opportunity towards support. So I like to play reversals against these overreactions, and I'm going to show you the key levels that I'm looking at. This is going to prepare you to trade the best setups at the best prices. So like I said, on CPI days, these are the days that I tend to do best because I like the overreactions. I like the trend reversal plays. I believe the last CPI day was right here when SPY gapped up and filled this gap. And once it closed this gap and reacted bearish, I began to play the put options. It made an 80% return twice on that day. So with that being said, if the SPY does gap up after 8:30 a.m. once the CPI data is released, I will be extremely interested in only buying put options for the day, right? So in terms of upside potential, we're going to be discussing upside potential and downside potential because, once CPI data comes out, we could see a 10-point sharp move. Now, with that being said, these are my levels that I have lined up right now. So here's what I want you to understand. In terms of where SPY closed at a gap breakout level. So what is a gap breakout level? When a stock gaps down, take the high of day. You can see right here, SPY gap down. It opened up lower than it previously closed. These are daily candles. The high of day is at 395.25. If it breaks above that and turns that roof into a floor, it's going to start to break out because there's no resistance, and it's going to start to fill the gap above at 399.40. So one make it or break it level is going to be the new gap breakout price. We're going to call it the previous closing price. $395.52. That's going to be our first level of interest. We're going to keep an eye on that, right? And understand that's a gap breakout or fake out level. Now, another key level that I'm looking at is $399.40. That's a higher gap that's waiting to fill above. And as you know, when SPY likes to fill the higher gaps, it loves to have those gap close reversals, right? And then our last level that I'm going to be looking at heading into tomorrow would be $405, right? So these are my three levels. In terms of your upside potential, those are your three levels. And that's where I'll be looking to play trend reversals. Now, if we have a 10-point spike, I would be looking to buy those puts, and I'd be looking for resistance at 405. That's what I'd be looking for. And then if 405 cracks, the target would be $400. If $400 cracks, then the target would be 395.52, right? So if it gaps down, there's going to be a gap to fill below at 395.52. If it were to top out at 405, it would start to trend back down to fill the gap below. Obviously, I wouldn't be aiming for that big of a target. Keep in mind, there has been a lot of heavy volume on put options coming into swing trade through the CPI data. I'm extremely bearish, but if it does gap down, I think it's going to be an even better opportunity. If it does gap up, if it gaps up, I think it's going to be an even better opportunity to day trade put options. Now, in terms of, we discussed the upside levels to short with the downside potential. Now, in terms of, let's say it gaps down heading into tomorrow, what would be the key levels to play the puts? So if this does gap down, 395.52 would be that key make or break level to look to short if it ripped back up there somehow, 395.52. Another key level that I'm looking at is 390.58. If it cracks below that, then we will be on track to go to 386 to 384. Now, in terms of the best levels to buy the SPY heading into tomorrow, if it gaps down, your best level would be this level right here. If this were to somehow sell off all the way down to $384, that would be a steal. And the reason I say that is SPY had a very nice breakout, and it's been consistently bullish and trending up ever since it broke above that 384 gap level, and it has never been retested. So whenever the SPY decides that it wants to, retrace back for the first time, initial reaction to that 384, whether it's tomorrow, whether it's later into this week, it should be a good dip buying opportunity where previous resistance reacts to support and it starts to spike back up a little bit. So in terms of your best level possible for the short term to be buying call options would be $384. That's not the best setup at the best price, but it's a good setup in terms of the best setup at the best price. There's a gap to fill below at 307.90.38. That would be a more oversold level heading into later this week or next week, whenever it's going to happen. And then a key level that I'm going to be keeping an eye on are the gap levels, man. We have so many gap levels. We have a gap level at 395.50, which is the make or break gap breakout level. We have a gap level at 390.58, right? So those are my key levels, right? So heading into CPI in terms of like a 10-point move upside, 405 would be the best price for puts to short. If we got a 10-point move to the downside, your best chance would be 384 calls. It could potentially bounce at 386, but I'm telling you, man, that 384 level. So basically in advance, that's what I can give you in terms of now. So if we do gap up, what I'm going to be looking for is I'm simply going to be looking for something like this. Let me go back in time and kind of show you what it is that I'll be looking for in terms of these overreaction plays on what I like to focus on, right? This is what I'll be looking for in the pre-market if the SPY were to gap up. I would look for something just like this. So say we get this massive spike. What I would look for is, once it has that massive spike, I would look for the peak. If it has a big drop somewhere, then I would look to short it towards lower highs or towards that resistance level at the market open, right? So if I see, okay, there's a lot of resistance right here, it sells off at market open, it turns this previous support into resistance, I would start playing the puts towards previous support reacting as a resistance. That's how I would play it if it were to gap up. Now, if it were to gap down, I would be looking for dip buying opportunities. In terms of those dip buying opportunities, 386 to 384. So very, very simple. That's what I can give you in advance right now in terms of my overall analysis. And then the key make it or break the levels. So these are levels that I'm not really interested in potentially trading at, but these are levels that I'm watching as well. $399. There's a gap to fill above. There's also going to be this 395.52 is going to be very, very key heading into tomorrow. Say this spikes to 405 and it sells off to fill the gap at 395.52. That's make or break. So with a tight stop loss, that could be a call opportunity if it sells off 10 points very hard. But if that reacts as a resistance level, it's going to be a put option opportunity at that 395.52. If it reacts as a support level, I would only consider buying it if it sold off 10 points from 405 with a very tight stop. Just to understand, if this gaps up or gaps down and that reacts as a resistance, that's going to be a great put opportunity as well, along with 405. So those are my key levels, man. Those are my key levels. Along with the pre-market highs, I'll look for a rejection towards open if it gaps up. And then I'll short into those lower highs, previous support reacting as a resistance. If it gaps down, I'll simply look for dip buying opportunities at 386, 384. Best price to be 384 to that 379.30 lower gap. That's my overall analysis heading into tomorrow. Those are the best possible levels you could be trading at. So in terms of our main levels of interest for puts, 405 would be the best. I'm eyeing this gap to fill above, but 405 is our best level for puts. 395.52 is a make or break level. If it reacts as a resistance, it's puts. It's only calls if the SPY gaps up and then sells back down to fill the gap and reacts bullish with a tight stop. Do not underestimate it going lower than 395. It could sell off more than 10 points. Do not underestimate. But it's only calls at this level if the SPY gaps up to like 405 or something and it quickly sells off, reacts bullish with a tight stop, right? If it cracks, reacts as a resistance, or if SPY gaps down and pumps back up to that level, then it's going to be puts. In terms of if SPY gaps down, 386 to 384, 379.30 is best price. Very unlikely for tomorrow. But 384 would be killer, and 386 is worth keeping an eye on as well. But I'm telling you that 384 level should see an initial bounce off of that. So that's my plan, man. So in terms of trend reversals, 384 calls and 405 puts in advance is the best levels I can give you. Now, once the pre-market comes out, I will have a much better understanding of what the true levels are going to be and where we should be focusing on. But overall, that's what I'm looking at heading into tomorrow. Now, in terms of today, and one thing I wanted to address, so I did have my second red day in a row, and these two red days have been coming from me not trading the best setups at the best prices. So I have two, you could think of it as like I have two accounts. I have one account where I trade the best setups at the best prices. I trade proven gap trading strategies that work in my favor that have led to my success. And then I have another account where I'm simply like trading price action. I'm trading basic patterns, basic price action, a lot of things that you can find, on YouTube, or just things you could find for free in general. Nothing really special, nothing that has led to massive success. More of like an account that I've experimented with. as of now, heading into 2023, it has not been going very, very well in terms of the basic price action. But in terms of the gap trading strategies, it has been working to a T, right? So with that being said, if I do decide to continue to trade the setups that are not as good, it's going to be like a separate account type of deal. And it's going to be much smaller position sizes where I'm looking to experiment and backtest. That's something that I wouldn't recommend anyone to do. One thing that I do need to focus on, if I'm going to decide to enter a trade that's not the best setup at the best price, not only do I need to scale down in size, but I really need to focus on trading the trend. You guys know me with the gap close reversals, and with my strategy, I love trading reversals, but trading against the trend, when you're just trading simple patterns and you're not using the gap trading strategies, I'm finding it extremely hard and not too profitably doing. So moving forward, if I'm going to decide to just trade basic price action strategies, I need to focus more on adapting to the trend, and I need to be getting better entries. So if the trend's bullish, I need to be buying dips, not breakouts. If the trend's bearish, I need to be buying resistance, not support, right? So those are some changes that I want to make heading into the micro trading opportunities if I do decide to even take those, not that I need to. But as always, guys, as of now, everything has been working amazing with the gap trading strategies, and let's continue to just mainly trade those. Anything else is simply an experiment with a lighter size. But moving forward in terms of basic price action trading strategies, if I do decide to keep on trading them, like I said, I need to focus on trading the trend, not against it, not looking for reversals, and simply analyzing the chart, waiting for the right opportunities, waiting for overreaction. So if the trend's bullish, wait for a massive dip to occur to buy. If the trend's bearish, wait for a massive spike to occur to short, right? And simply trading with the trend. So in terms of these 2 red days, it has been 1, not trading the best steps at the best prices, and number 2, trading against the trend. The trend has been bullish, and I've been interested in puts. And not only that, if you're going to trade against the trend, which is not a good strategy if you're not using the best setups at the best prices, you need to make sure that you're getting the best entries possible. And I haven't been getting the best entries possible. So just make it easier. Focus on the trend. Focus on getting the best entries, right? Wait for the charts to develop. Wait for the opportunities to come. Wait for the overall situation to develop. Those are some tips that I can give you. With that being said, tomorrow is expected to be a massive green day in my favor. These are the days that I do best in terms of trading, when we have some sort of FOMC or CPI data, when we have an extremely volatile overreaction and the trend is already set and I'll look for a reversal. These are my favorite days to be trading. So if you do want to be a part of Trader Society, I'm telling you, man, we're going to absolutely crush it tomorrow. It's going to be the first link down below in the description if you want to join us. I will see you guys tomorrow live at Market Open.